What is going on, everybody? And in this video, we are giving a state of the market and some stock picks that I believe are going to be what you need to be watching tomorrow. Now, as you can see, the day is very red. State of the market. This is what's important. Earnings are coming out, starting to show. One thing to keep in mind with these earnings that are coming up, we kind of already started seeing that in the banks. Even last year, we were starting to see this in some of the Q3 earnings. Expectations are seriously just blown out of perspective given the pandemic numbers. You've seen it in Amazon primarily. You've seen it because of the massive rush to buy supplies. Something Kathy Wood has also talked about as well, about how a lot of companies had all these big back orders to try to catch up with demand during the pandemic. Now all these companies got big surpluses of supplies and nobody's buying. So we're going to start seeing this. Again, a lot of this stuff is a lot sooner than I even expected. I expected a correction in March. I expected stuff to happen further down. I thought this quarter would have been okay. But we're starting to see that come to the forefront a lot sooner than that. So my expectations actually for Amazon is really low. I think they're going to miss. I think we've been seeing that over the last couple quarters, and I think again supply is way higher than demand is right now. So being said, and then plus the expectations, everything once you have that phenomenal expectation you put out there, analysis are going to put these ridiculous expectations onto you for the next one. That's why some companies came out and said that there were no forward guidance or anything like that. I believe Apple is one of those people that did do that, which is a very smart move on their behalf, because you don't know what's expected. And so to put an estimate out there, especially with what had just gone on over the past almost 2 years now, it's hard to gauge that. And then you run into these issues where your expectations are extremely through the roof. And because of a historical time, you're not going to hit those. We're coming out of the pandemic. We're not going to hit those numbers again. So we're going to see some major correction moving forward. Again, something I was foreseeing, but I didn't expect it as soon as what was going on. And now we're starting to see that. That was what's playing out. Again, biggest concern here, though, is still Powell. Powell is the biggest concern here. It's more so the rate raises in time frame, something I keep reiterating. It can be, news came out about the whole Russia thing and all that stuff in Ukraine. I think U.S. is supplying Ukraine with weapons. I don't think any of that matters. None of that matters. None of that has really ever mattered unless it's affecting supply. Unless there's an actual war and the supply chains get affected, I don't think it's really going to matter. But from this point, it's about rate raises. What is going to happen? The market really isn't getting better. Now they're talking about increasing rate raises. They're talking about starting to take action. The Fed is starting to take action just in talks of that. So the market is really got a lot of misinformation. Powell is essentially saying it's transitory, which I think to an extent it is, and supply. We'll see in time. We'll see if that is true. I think he just got tired of people talking about transitory, and inflation was still pumping. But we've seen it kind of die down over time. Right after the seasons pass, even travel came down. Right, inflation on travel came down after seasons passed. So there's a lot of things to keep in mind that's going on here. There's a lot of different wheels turning during this whole process that's going on here. And what's ultimately what I'm trying to do is pinpoint what exactly is the root of everything. And right now it's that rate raise. What is going to happen with that? We are obviously not doing better because now we're starting to see earnings where we're seeing this issue with the demand not being there in the massive amount of supply that all these companies have. So it's going to be an issue at least into the next couple of earnings to kind of get everything back to normal. Try to normalize things again, and that's going to take time. Again, the rate raises are again a big issue. They're going to normalize tech. forward guidance is going to be a big thing. I'm even starting to kind of think about even Tesla, their forward guidance. How are they going to do? They've outperformed through this whole pandemic. I think it's something a lot of people don't understand is they're still way outperforming even through this historical time. So it's good to keep in mind for companies like that. In Apple, removing forward guidance because they themselves, there's a reason why they're number one. There's a reason because you can't expect, you don't know what's going to happen, right? You don't know if the demand's going to get there. Right now, the good thing for them is they are, right, the demand is still through the roof, right? Everybody needs a cell phone, so they kind of can fall back on that. But being said, going into tomorrow, right, everything is just waiting on Powell. This market correction, I think Powell is going to come in to this meeting, and he's going to essentially say that none of this. He's going to essentially tell everybody that he has to wait and see, like he's been playing. He's going to play very passive on this whole thing, right? He's not going to come in hawkish like he was last month. He is going to say, well, it is what it is, and we'll tell you when we get there. Again, I thoroughly believe we're going to get an emergency rate raise. It's not going to be televised. And so with that being said, that is why I think the market is correcting itself now. The market is not going to wait on the Fed. The market will correct itself now so it can continue to push up. So without the Fed, it'll just do it now. That way it's early and out of this year because Powell may not even raise rates until middle of the year or way until the end of the year. So being said, the market's going to be like, you know what, we're not going to play this game. We're going to correct now. And then we'll start pushing up again from that point. Again, there's still tons of money. It's still very bullish. I think we'll still end the year all-time highs, right? I think it's all very much a very strong possibility. Beginning of this year, we're trying to get all this junk out that's been essentially holding us back from last year out in this year and get started and start moving forward. Being said, SPX is definitely broke. Some really bad support. So I guess the key levels I'm kind of really looking at here going into tomorrow is the 4,400 mark. And also I do have the 50 weekly, the 4325 mark. Now, typically what I've always talked about is the daily. The daily is great, obviously great support for the 200. So normally you get a strong reversal around there. I can see us selling off a little bit more. I don't really see us coming crashing down any much further. I think we could possibly visit the 200. If we crash past that, there's a bigger issue aside from rate raises. I think right now people haven't seen a true correction over a year and a half, and so people are panicky right now. But again, we still have room to fall. I think we could still come down to the 200 on the daily, be perfectly fine. Again, get a lot of people out that haven't really been in the market that long and think the market only goes up, which it doesn't. It does correct. So being said, I think right here, I think we're going to visit this area again, the 4,400 mark around next week. Maybe we go flat here and then trade further down here, buy Powell. And then I think we're going to get a hissy fit because Powell's going to say we're not doing anything. We're just going to continue talking about rate raises. And the market's going to get mad. And so they're going to continue to try to correct the market to try to take into what they kind of figure a rate raise would be. As far as normalization, trying to figure out how the market is going to, ultimately the market would normalize on a rate raise, especially big tech, your growth, the ones that are essentially pushing the market to all-time highs because of innovation. So being said, they're going to get hit. They're going to get normalized. And in doing so, the market's trying to judge how big of a correction that would be. And once it figures out where that is, I think we'll start pushing up. And I think what it's going to take, even though I think we're waiting on Powell, I think that's just word. I think that will just cause a hissy fit to us to sell off just a little bit more for us to start pushing back up. And then I think you'll have some other earnings next week, your Apples, your Teslas, and Facebook is debatable, but there'll be some other companies like your Googles that will do extremely well and start pushing the market back up. You'll have some value that does extremely well and start pushing back up. I think you'll have your industry leaders that will push the market back up from that point. Again, I think we're coming very close to a bottom, but we still need word on Powell. And again, I think we're still not going to get nothing. Market will correct itself the way it thinks it's going to, a rate raise is going to occur, and then we'll start pushing up from that point. That is my thesis, not financial advice. But so going into tomorrow, Bitcoin has actually got some news about Fed talking about crypto, stable currency. It's something they've been talking about for a long time. Again, I think this is a big year for crypto as well, especially with all the craziness that is the market in general. Is this 41K mark going to be the new base for Bitcoin? I think Bitcoin new base would probably be closer to 30 in my opinion, but I think it can hold this 41K mark very well, especially because I think we're right after this whole fiasco with Powell. I think right after this we're going to start pushing anyway. So going into a very volatile year, in my opinion, because even though the market's going to try to price it in, it will come eventually. It will come in my opinion, an emergency rate raise, and then the market will have another fit and hissy fit at that point again, and then we'll continue up. So there's going to be a lot of ups and downs this year, especially in the beginning of this year. I think leading into the middle of the year, we're going to see a lot of that before we start pushing back up. So going into tomorrow, what I ultimately want to do, actually, let's bring up Netflix. Netflix got crushed after hours. They had earnings, and as you can see, they got absolutely obliterated out of the water. Expectations were extremely high going into it, something I was talking about. And so now we're starting to see this because obviously people can't keep up to those numbers. But I think some of your big companies will, your Apples, your Googles, and your Tesla, those companies will make or break expectations because people are flooding there. In the fact that because of the pandemic, people were in a lot longer. People, it's the winter, so people are going to watch YouTube more, right? People are starting to open businesses and teach themselves, so they use YouTube. Being said, Google will shine. Tesla has proven numbers. They will shine. Apple, people need phones no matter what, and they're branching off into other things, didn't give forward guidance, right? And they were smart about the situation. I think they will shine. But all these other companies that had promising futures, a lot of these are going to get wrecked really bad. And we've been seeing that for the past couple months. A lot of these nice mid caps and small caps just been absolutely obliterated and haven't come back. And you're going to see that for the remainder of the year. I think at some point they will correct and everything will start pushing up again. But we need that first actual rate raise. We need to stop talking about it and actually get it. Once we actually get it, we'll start moving forward. Again, not financial advice, just my opinion on everything. But let's see, as far as, again, Netflix obliterated, is this going to cause the market to gap down? I think for some, I can definitely see it. I think Roku will actually probably really get blasted because of this. Yeah, it's already starting to get blasted as well. So Roku will be blasted for that. But banks, they churned today and started selling again. Right, they're losing revenue as well. So everything is losing revenue, but people are going to, with innovation, people are going to go after big companies. This is why even Microsoft made that move and is gobbling up Activision. Right, these bigger companies are going to start doing that. The ones that have solid ground, that built ecosystems, they'll survive. Amazon, again, just extremely high expectations. And again, I think I love the way Apple approached that, not providing forward guidance. It hurt them in the short term, but in the long term, it's going to help them because of situations like this that we're seeing with Netflix. So being said, going in tomorrow, you really need to be watching Tesla. I think if we do trade flat or go down, again, my big level for Tesla is 900. If it breaks that, you got the 850 mark at that. If we do gap down, I'm looking for this to actual rip. again, these are why I bring up these same companies, because if we gap down for any reason, these will recover very quickly because of essentially all the stuff I just talked about. So Tesla being one has proven numbers. If we wake up tomorrow and it's at 950 tomorrow, expect it to gap up, right? If it's a 50-point drop, if it goes straight down 50, 60 points, I can guarantee it's going to make up probably at least half of that in the morning if it gaps down and then is sitting flat. So that's the move I'm looking for first thing in the morning. Your Amazon, your Google, or your Tesla and your Google are very good about that. Apple is okay with that, but you get bigger moves out of, again, Tesla and Google. ASML is another huge one. It's been holding up really well, although it's been getting pretty crushed lately. Today it was started pushing up very good. I think semiconductors, your chips are still going to do very good because, again, all the big companies I just talked about, right, they still need chips. So semis and chips will still do very well moving forward. And again, this is all technology based, and I know it's really hard not to. That's why some big value, your BAs and some of your travel stocks have been pushing up. Airbnb had a huge day as well. Actually, bring up Airbnb. It had a big rip today. You might see a big flux into value. So for Airbnb, I'm kind of watching that 154 mark tomorrow. If it holds that, I think we can push another big push up on that as well. And then Google is the other big one. It's been getting trashed really bad, but I got the 2631 mark as far as the daily 200. And the big thing key here is that's a very key level. And then you have essentially the round number, the 2600 mark. So you get the 2633 and then the 2600 mark are good key levels for Google. Again, Google is going to be one of the first ones to rally back fast. So that's one I want to keep on watch. Yes, there's tons of great companies out there, but right now you really need to focus on what is going on in the market. This is why current events, this is why fundamentals matter in the market, because if you were just trading stocks, a lot of these stocks just broke and they look like they're getting ready to break out to the upside, and they just completely crashed because of an event that's coming up that's dictating the future of a lot of different things in our economy. So because of that, we're going to see what happens in this normalization. But that's pretty much it. I don't want to make this video too long. I know the state of the market, I do put out a lot of stuff. There's a lot of information out there, and it's important to know exactly what pieces are moving and why. Again, I could be completely wrong. It's just my theory, my thesis. I think it's very important for you to establish a thesis on what is going on with the market and know what's going on with the markets. Be aware of events. Events have the most impact in the markets. Yes, technicals matter to an extent. They do help with supply and demand zones, where to buy, where to sell. But you also have to know that events even have a greater impact on everything twofold. So that is something to keep in mind. But if you've made it this far, go ahead and drop a like button. Also, on the weekly update, I'll give a more insight on key levels. I think tomorrow is just more, you might get a dead cat bounce because of the major selling that's going on today. But understand that aside from that, that's pretty much it. I'll get more into that over the weekend. Again, there's a lot of different levels we're coming into that we haven't seen in a while. Realize this is a normal market. This is what the market does. It doesn't just go up. And we haven't seen a normal market in about a year and a half or 2 years at this point. So, so being said, go ahead and drop a like button, and I'll see you guys later.